Most people don't know this, but supermarkets are on a 1 to 3% profit margin. That means that if you're doing $10 million in revenue, you're lucky if you make $300,000 after the taxman takes his cut. This supermarket is listed for $2.95 million, and I'll show you why it might actually be a steal and how it would turn into a $4 million asset. Business valuation number 57. I'm Eli. I help business owners avoid big, expensive mistakes before buying, selling, or scaling a business by doing business valuations and exit strategy. Let's break the supermarket down. This is a neighborhood supermarket in Brooklyn, New York. Busy corner, heavy traffic, EBT accepted. They're doing anywhere from 7.3 to $8.5 million in revenue per year and claiming about $1 million profit per year. On paper, seems strong, but this deal really comes down to a few pressures. First is definitely the labor. There's about 40 employees there, and the payroll is over $30,000 a week. Those expenses never pause, and you have to take that into consideration. Second is the rent. It's $50,000 a month, every month. Even with a high volume, the rent is high. Third, it's labeled as semi-owner absentee. That usually means that the owner is not standing at the register, but he's working there full-time, managing the vendors, the supply, and the staff. I would say this business works well based on a number because the owner is heavily involved. So the real question is, can a new owner just step away and keep this machine working like clockwork? That's the entire deal. But if I would have to make this business worth more and much easier to sell, here are the three things that I would do. First, control the people chaos. With 40 employees, buyers will constantly think about the staff issues. You have to create an operational playbook and management playbook and make sure that the entire staff runs based on your systems, on your processes in a repeatable way based on your standards. Just by doing that, you will work less, you will make more money, and you'll have much less stress. You will be able to sell the store for a higher valuation. Second, I would separate the financials of the business to a few different categories. I would make it visible how much revenue comes from prepared foods, how much revenue comes from EBT, and I would create a plan and a strategy based on the data that I have. Third, you have to prove that the owner isn't holding everything together. The semi-absentee business always gets questioned by buyers and investors. How much is the owner involved? What does he do in the day-to-day? Who makes decisions? Who puts out fires? Who deals with the stress of the employees? If the owner could disappear for 30 days and the business continues to run, you have a strong operations and the business will be valued more. The bottom line is that we don't need more sales, we don't need more marketing, we don't need more people. We need tighter people control, we need operational playbooks and less owner dependence. That's how this business sells for more and much faster. I would say this business is for already experienced grocery store, supermarket operators that want to scale or to grow their own business. It's not for passive investors, private equities, or family offices looking for cash flow without involvement. And if you want clarity and confidence before making a bad, expensive decision about buying, selling, or scaling a business, offer business breakdowns and one-on-one strategy calls. Links in the bio. And comment the next business you want me to analyze.